yesterday, late in the day, remember, Bitcoin doesn't close until 8 p.m. Eastern time. That's my time. Remember, I think it's 12 UTC time, which is that same time there. But the point being is that yesterday, Bitcoin got a late day surge closing above the pivot line. So it closed above. That's step number one. Step number two is
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, let's discuss these topics and more.
This is the US dollar chart right here. And essentially what we have is this was the Fed decision, the reversal, which pushed the markets down. Then overnight, the dollar went higher, then reversed, which helped push the markets up, obviously. But now the dollar's starting to push up. Now, part of this is the jobless claims numbers. We got jobless claims out today. They came in at a very low level, so there's still not a lot of people being fired from jobs, even though hiring is substantially declining. But remember how cycles work, guys. Cycles don't work where all of a sudden businesses hire like they did through COVID, and then on the flip of a hat or a flip of a dime, they just fire everyone. That's not how cycles work. Cycles work where businesses go from hiring a lot to hiring less, to hiring just a little, to starting to lay off a little, to starting to lay off more, and then more and more and more, right? I mean, that's the way a cycle goes. It's not really a deep dive cliff unless you have something like COVID, which is a black swan event. So that, again, makes sense why we're not seeing the firing yet. It doesn't mean the economy is fine and never going to have a recession again, like the narrative that is being spun today. All right, so that's where we are on the U.S. dollar. Again, the dollar to me is still in a breakdown, so I do expect the dollar to eventually go to the downside. Stocks like NVIDIA are trading up today. I mean, basically everything across the board is catching a bid, but I am curious, like I said, to see where this market goes when all is said and done, when we close today, and even if we close above. Remember, in 07, we had about 3 to 5 days of trading above the all-time highs before it rolled over. Let's watch into next week what ends up happening. All right, we got to talk about Bitcoin, guys. I'm going to jump right into Bitcoin because it is so important. So follow me over here. Bitcoin, guys, yesterday, late in the day, remember, Bitcoin doesn't close until 8 p.m. Eastern time. That's my time. Remember, I think it's 12 UTC time, which is that same time there. But the point being is that yesterday, Bitcoin got a late day surge closing above the pivot line. So it closed above. That's step number one. Step number two is, can it confirm today? If it holds where it is, it will confirm the breakout above the pivot line, and then potentially it can go up here to 68,500. But very impressive move. Part of it is risk assets. I think part of it, again, is probably the beginnings of these Fed cuts, all of these kind of meshing together. But I think more than anything, this is a risk asset move. When you see the stock market up like this, Bitcoin is going to catch a bid. There's no doubt about it. All right. So again, watch that. We're going to see where it closes. Upside target, if it does, is 68.5. If it's unable to confirm or ever comes back down and confirms back below, then your 52.6 comes back into play very, very quickly.
Bitcoin surged to $62,600 following a rare 0.5% rate cut by the U.S. Federal Reserve, raising concerns about potential volatility ahead for both BTC and the stock market. The U.S. Federal Reserve's 0.5% interest rate, cut on September 19, a rare move in its history, sent Bitcoin soaring to $62,600. The reduction, intended to stimulate the economy, marked only the third time the Fed began a rate-cutting cycle with such a significant drop. BTC's surge liquidated $128 million in short positions, according to CoinGlass, indicating strong momentum in the crypto market. Despite the upward movement, BTC faces stiff resistance. Popular trader Gel noted that breaking above $62,500 could signal a stronger rally towards $65,000. However, analysts urge caution, with potential profit-taking and reduced leverage, as the market approaches key resistance zones. While the Fed's rate cut seemingly boosts liquidity, it could signal underlying economic concerns. The Kobayashi letter pointed out that previous instances of similar cuts in 2001 and 2007 preceded significant stock market crashes, with declines of 31% and 26%, respectively, within 2 years. This raises questions about whether the Fed's optimistic economic outlook aligns with the drastic policy shift.
Now, gold had a big dump out yesterday as well. And again, guys, gold, we did see that coming in nicely here yesterday, but it has pushed back up. But notice it's still being kind of, you would say, just kept under wraps from being able to break out. So if we just jump over here, guys, right, we look at the gold chart, we can see very clearly that you have this resistance level. And even though gold pushed up to it again, it's still stalling out. And I'm still skeptical on this gold move because, again, something's not meshing here. If we're not going to have a recession and everything's hunky-dory, right? I mean, and again, walk through the logic with me because I'm poking holes in the narratives if you follow along. So the narrative today is that, there's never going to be a recession here in the next 6 months, let's say, or a year. Or basically, we're avoiding this recession that was maybe there was a chance of it. Okay, if that's the case, then why do people need risk assets, right? So again, you should see gold coming down instead of going up. But what we do know is that Fed banks or Federal Reserve banks, central banks around the globe have been buying hand over fist gold. And so you're having this kind of misjointed kind of narrative spin where, okay, so you want to play the no recession game, well, then gold should actually be coming down, especially with the dollar doing relatively well for yesterday and today. It's right around the flat line. That's not happening. The other side of the coin is silver is actually having a big pop. And if I flip over to the silver chart real quick here, let's jump over to that chart. Silver is playing the narrative game, right? So silver, if you have a good economy here, and let's flip over to that silver chart here, you can see that silver's pushing up trying to break out. So the narrative is strong with silver, but it's not making sense with gold. And I want to just point that out. So something's a little mismatched in that narrative basis. But either way, let's watch to see, do we close above this line? If we do, watch for confirmation. If confirmation occurs, you should head up to 32.50, maybe even higher. I just am not a full believer. I, again, think that this is a too easy, right? The 50 basis point cut, everything is all fine now. And again, no landing scenario is essentially where we're headed, right? And again, call me a skeptic, call me being a trader for 25 years. I've seen way too many of these maneuvers from various cycle tops that make me very wary about the motives behind narratives, behind the institutional side. There's just too many things going on, and there's so much money invested in mega caps that there's no way that the institutions unloaded their positions in full yet. There's way too many trillions in Apple and Microsoft and Nvidia. They definitely did not unload, so they still need to unload some. Makes sense why they could be pushing it up. All right, we got to talk about China here. China, Jeffrey Gundlach, one of the big investors or hedge fund players out there, he came out yesterday and said, hey guys, I'm a big fan. I'm invested in China. I've told you before that we've seen Michael Burry invest, David Tepper invest. In fact, on Monday, I revealed a 900 contract call option on FXI, and FXI is rocking it this morning, guys. So again, if you pick this up, you are in very good shape with me. It is coming in just a tiny bit, but it's still up sizably. Take a look at this. Look at this move from yesterday's close all the way up here, coming in with the market a tiny bit. But again, these contracts are definitely going up, or at least they are up from where we were on Monday.
Bitcoin has moved above the daily Ichimoku cloud, signaling potential bullish momentum. But key indicators suggest caution as the cloud remains in bearish territory. Cryptocurrency trader Josh Olszewicz recently pointed out that Bitcoin has broken above the daily Ichimoku cloud, which typically suggests bullish sentiment. However, despite this positive development, the cloud itself remains bearish, signaling that the market may not fully confirm the upward trend just yet. Olszewicz also highlighted that the Tenkan Kijun (TK) indicator could still point to further downside, as the cloud does not show a bullish formation. For a more confident bullish continuation, traders are looking for a confirmed bullish cloud pattern and a bullish TK cross. Despite the current bullish setup, Olszewicz warned that previous Kumo breakouts earlier this year did not result in sustained rallies. This raises concerns about the reliability of this breakout as a clear indicator of continued upside. At the time of writing, Bitcoin is trading at $61,986, marking a 2.9% gain over the past 24 hours. While the price shows short-term strength, analysts are urging caution until the Ichimoku cloud and TK indicators confirm a stronger bullish signal. BlackRock's latest report highlights Bitcoin as a valuable portfolio diversifier, emphasizing its distinct risk and return profile compared to traditional financial assets. The report explores Bitcoin's growing appeal among institutional investors and underscores its potential for long-term portfolio diversification. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.